CEO Fusion Finance joins us. Hi Sanjay, good morning. Welcome to the show. And on the results front, let's begin with the interest income. There is a decline that's reported of 39.2% year-on-year basis. NII also 38.2% has declined on year-on-year basis. Just want to understand from you, what are the primary drivers behind this drop, and how does management plans to restore income growth here?
Sure. So good morning here to you and your viewers. It's been a very interesting week for us, follow up to the quarter. So I think two key things first here. So I think from a microfinance business perspective or a sector perspective, we see huge improvement in terms of things on the ground. And it is important to understand that eventually getting these things into the book takes a little time. It could take about 3 to 6 quarters. Now, from an overall perspective, if you see the disbursements have improved over the previous quarter, the books at an AUM, we are close to about 7,000 crores. From a disbursement perspective, quarter two was a very positive quarter for us. We were at about 1,300 crores of new disbursements versus about 950. So that's about a 37% improvement over the previous quarter. The second thing is that, and that is extremely critical, that what the microfinance industry had gone through, the collection efficiencies for the first time for us are now inching closer to 99%. There are multiple things that we have done in giving our cap.
I think that we have got Sanjay on a bit of a patchy line, but we were just trying to understand that this time around, the interest income has seen a double-digit decline of almost 32% on a YOY basis. What are the factors behind it, as well as what's the outlook going ahead? In terms of the internals, what we can also see is that the AUM has also contracted almost 39% on a YOY basis, though the losses have narrowed this particular quarter. But the management previously did mention that they are on the path of the profitability. But Sanjay, please go on. You were making a point with respect to the interest income declining. What were the factors behind it? Please continue.
Yeah. So the big reason on the interest income decline is, like you already said, that we are on a reducing book. However, from a profitability and a PAT perspective, which is the most critical thing, and our losses from 92 crores last quarter have narrowed down to 20 crores, and we are almost on way to profitability. Now, it is critical to note that these reduced losses or closer to profitability have come on the back of the most critical metric, which is credit costs. So credit costs from about 178 crore last quarter has now come down to 111 crore. So these are the two big things that give us the confidence that going into quarter three, we are looking at visible profitability in second half of the year. And the book growth that you mentioned, we should be seeing book growth somewhere around end of quarter three and beginning of quarter four, when the fresh disbursements start pacing out the reduction in the existing book. So the reduction in existing book because of repayments is close to about 575 crore. We expect to be reversing that somewhere at end of quarter three and beginning of quarter four. And that's when you'll start seeing the book going positive.
Sanjay, the losses have narrowed this particular quarter. You have previously mentioned that the profitability could be achieved very soon. How soon? If you can give us a quick take on this, and how does this timeline look now based on the current trends?
Right. So I think the key thing that is impacting profitability is the credit cost, which you see hugely reducing. I think it is fair to assume that we are targeting profitability in H2. I can't give you an exact guidance, but I think clearly if you look at the credit metrics improving, collection efficiencies of closer to 99%, which are the strongest that we have had in the entire year, we are very confident that we are seeing visible profitability in H2.
Right. With that, it's time up. Thank you so much, Sanjay, for being on the show and helping us understand the nitty-gritties on the numbers. Thank you so much.
Sure. Thank you so much.